The return that we've seen in munis, do you think that that continues? And what do you make of all the issuance?
I do think that it continues. If you think about 2019, it's been a year of record inflows, so a large imbalance in supply and demand. At the same time, performance has exceeded expectations. And to your point, most recently, supply has begun to pick up a bit more. So for the first 9 months of the year, we had rather benign supply, but as taxable issuance has picked up, we're coming off of a month of $55 billion issued in October, which sets up for a big Q4. Demand has been able to keep pace, so no upset in performance thus far, but something certainly worth keeping an eye on.
So I actually had two questions for you, and I think they're related. One is, a little while ago, you did an interview where you talked about the key gauge of the muni market perhaps being broken. Do you still feel the same way? That's, I guess, number one. And number two is, I always wanted to spend more time in the munis, but it just never really happened. And I think I lump them in with taxes. As soon as somebody says munis, taxes and utilities, I go snooze.
I thought I said that in commercial break.
Well, it happens to me too, but it really is true. But I added utilities. And is munis as an asset class, is it a late cycle asset class?
Very good question. So to your first question around the traditional muni treasury ratio being broken, the reason I mention that is we've seen $80 billion in mutual fund inflows year to date, and that's largely driven by retail. There are many reasons why retail cares about municipal bonds, whether it be the tax exemption, the negative correlation to equities and equity-like risk, the high credit quality, low volatility. When they look at the asset class, they tend to care less about the relative value natures as the crossover buyer may. So my point was that as retail is driving the flows, look less at muni treasury ratios and look more at the benefits of munis. The second question, munis are somewhat of a late cycle. You were speaking earlier about the housing market and the resilience there and the resilience behind the consumer. And it is a more late cycle, but the underlying fundamentals of the market continue status quo, if not improving because of the length of the credit cycle that we've been in. But the technicals are what are driving the market. The massive amount of demand chasing less and less high quality fixed income assets, both in tax exempts as well as in the taxable universe, is what's driving the underlying